Good afternoon, welcome. You're watching Earnings Edge with NDTV Profit. I'm Hersh Sayta, with me is Pallavi Nahata. We're going to take you through, of course, the next 15 odd minutes where we'll speak to the management of TeamLease, and we have them with us today. And we also have, after which we will switch over and talk about a few specific stocks which are making good moves today. So first off, let me welcome on board Ramani Datti, who's the CFO at TeamLease Services. Welcome to NDTV Profit, Ramani.
Thank you.
Right. Talk to us about what's caused a good spike when it comes to your sequential revenue numbers. We're seeing some bit of relief with regard to that revenue number coming back sharply. Is it just second half, or is there something else that's fundamentally changing?
Yes. No, definitely in terms of volume growth compared to last year, this year, there has been a good momentum. So far, for this 9-month period, we have added 35,000 new headcount to our base. And specific to Q3, there is some sort of seasonality because typically in Q3, companies also pay festive bonuses, some one-time billings to their associates. So that also create some 1-2% of a temporary hike in the revenue billing. So that's why when you look at the sequential growth in revenue, it is 8%. But if you normalize taking away this festive billing, it's a 7% sequential growth, which is still a good number. And that is because of the consistent growth in headcounts, associate volumes, and our markups.
Okay, so ma'am, I do want to ask you a little bit about the margins. Now, despite fairly strong revenue growth, we have seen slightly lower margins, and the management has said that it is expected to return to its normal band once there's once again a little bit of a pickup in IT. But what do you have to say on margins, and what's the way going forward?
No, as you have rightly mentioned, our margins got impacted, especially over the last few quarters, led by the drop in IT numbers, because that's one of our highest margin contributing verticals. So with IT staffing being on hold in terms of new hiring, so that has impacted our margins, as well as the second highest margin contributor is our degree apprenticeship business. So there also, because of certain regulatory restrictions on some of the schemes, we have to let go 40,000 trainees under that program. That is, again, at a 7% margin within staffing vertical. So that also has impacted the margins in staffing as well as overall company. But now that even the DA business, the apprenticeship business, also has turned net positive in terms of additions. So that will start contributing meaningfully to profits as well as margins going forward. So how we are looking at FY25 is, even without IT picking up, with operating leverage in staffing business as well as DA business turning positive on headcount growth, we are expecting improvement in margins as well as absolute profits sequentially in FY25.
Understood. So would you therefore seem to suggest that margins will go above that 1% mark, or would it be around about 1%?
No, it will go up. It will go above 1% within staffing segment, and at group level also there will be a consistent improvement in margins.
Understood. And with regard to revenue as well, if I can quickly have your take, what sectors have been doing well? Because it seems IT is still very, very subdued. At least the hiring patterns that we saw from the IT companies when they announced their numbers, it looked a very subdued kind of a quarter, which second consecutive quarter there. So which segments seem to be growing, and any concerns or any understanding on when IT will actually turn around?
Yeah, no, you're right. IT has been sluggish for the last few quarters, and especially Q3. Even going by the seasonality within IT hiring, Q3 is the lowest because there are also furloughs and lower billing days in Q3. That also has impacted this quarter. But even otherwise, at this point in time, we are not seeing any recovery as far as IT services are concerned. However, GCCs and captives are giving us good demand, and we are seeing green shoots on that side. So we are focusing more on adding IT headcount, tech headcount on GCC side for the next few quarters, whenever the demand picks up on IT services front. So we are fully prepared to deliver on that. Other than IT for this quarter, BFSI is little disappointing because while initially we have expected that almost 20-30% of volume growth in this quarter would come from BFSI, it is kind of muted in Q3. However, Q4, we have a good pipeline, and we have to see how the BFSI picks up in Q4. Other than these two segments, IT and BFSI, we are seeing good demand from rest of the segments, be it consumer, retail, manufacturing, telecom, pharma. Across all these industry segments, we are seeing good demand for Q4 and FY25.
Okay, I do have one last quick question. You're better placed than most, I guess, to give us a quick view of employment broadly. So, for instance, you did mention some of the sectors that are looking up, but what's the outlook going forward, and how are you piecing the broad employment picture at this point?
Yeah. As far as the employment outlook is concerned, we are very positive for the next 4 quarters. So we conduct a very broad-based survey on the outlook for the next 12-month period, and that has been positive across segments barring IT, especially at entry-level jobs. So we are seeing a good demand coming up, and mid and senior segment may continue to be impacted, but the entry level is going to be very strong across verticals, as I called out. Consumer, FMCG, FMCD, telecom, electronic vehicles, manufacturing, engineering, pharma, all of these verticals are looking for very strong hiring trends in FY25. And also in terms of skill set, sales, marketing, customer service, these are the skills that are on higher demand for the next 4 quarters. And also in terms of location spread, the strongest right now in terms of outlook is South and West. But at the same time, the Tier 2 and Tier 3 cities are also picking up across all the regions. Because so far we are seeing the maximum demand coming only from metro cities in terms of formal jobs. But now the Tier 2, Tier 3 cities are also catching up in creation of formal employment.
Got it. Thank you so much for that quick take on both the results as well as the overall picture with regard to employment. Thank you for that, Ramni, always insightful. But time to slip into a very short break. As we, of course, get closer to the interim budget, we also continue to get your top industry voices, expectations from the budget. As we slip into this break, listen in to Neeta Kapoor of the International Spirits and Wines Association of India and what she has to say.
We seek a reduction in the basic customs duty. Currently, the basic customs duty includes the agriculture and infrastructure development cess. So currently, it's an exorbitant level of 150%, which means 50% BCD and 100% AIDC. And we expect this to be rationalized to a more reasonable levels. Lower tariffs, aligned global standards, simple customs procedures. These are some of the initiatives that we are looking at.
Welcome back. You're watching Market IQ on NDTV Profit. Pallavi is with me, and we're going to take you through some specific counters which are buzzing. But before that, let's take a quick check on where markets are at. You're seeing the Nifty up around 0.4% thereabouts. But the action largely is also quite interesting with regard to broader markets. Before I come to that, let's quickly look at the Nifty 50 heat map if we can, to quickly look at what's buzzing and what's not. And within that, what you'll see is that's the contributories, of course. But within that, what you'll see is Sun Pharma, Dr. Reddy's up roughly 5%. Dr. Reddy's on the back of good set of numbers. Ayesha Motors also up around 3% or thereabouts. Those are the top winners on the Nifty for you today. 4% down on L&T, but outside of that, you're seeing drags coming in from Titan, which is down around 1% or so. But outside of that, nothing significant. NTPC is down just about 0.5% or thereabouts. 40 advances to decline. So your advance to decline is quite healthy. The market breadth looks quite good. And if we can have the advance decline, there you go, you'll see that. 600 declines to almost 1,400 advances. So the market breadth looking fairly good. Also, lastly, I want to quickly try and highlight mid-cap and small-cap because the broader markets seem to be doing fairly well. The Nifty mid-cap up around 1+% and the Nifty small-cap up 1.8%, both of which have done impressively. But the top loser on the Nifty 50 is Larsen & Toubro, and of course, that one on the back of numbers. Let's take a quick look at what's causing that pressure. We have Vikas who's standing by, who's going to give us that perspective. Vikas, it's a good set overall, at least on the back of the numbers that have come out broadly. But what's causing that the stock to tank roughly 4% in trade? Can you give us some perspective on that?
Yeah, right, Hersh. After the company declared the results yesterday, the stock has taken a beating today. At one point down by 6% and now kind of recovered to almost close to 4%. But what we have analyzed over the last 7 quarters to 9 quarters, and what we have seen is that the stock has always returned back, quarter on quarter. We see the stock has performed after the results impact. And if we see in every quarter, they have given a return of almost, or the stock has performed by almost 11 to 24%. So this is quite common over the last 7 to 8 quarters. And if we exclude the blip that happened in fourth quarter of FY22, so even in the previous quarter to that, the stock had given almost 5% return. So what we have seen is that this been the pattern, and what has done well for the company, I think will do well for the company, the strong order book position that the company has. Even in quarter 3, it's grown by 25% to 75,000 crore. Over 9-month period, if we see, it's almost 1.8 trillion rupees. And the cumulative order book position of L&T is almost 7 trillion rupees. So that's a robust order book position that the company has. Yeah. So that saves them from the volatility also. So that's something that's helping the company. The company also sees margin recovery for them, which due to legacy orders, they were facing a lot of issues earlier. But that also is recovering now. Yeah.
Thanks a lot for that. Now, L&T down by about 3.5%. But on the other end, we have Dr. Reddy's. The stock is up roughly about 4.5%, the best performing stock in the Nifty 50 today. And Dr. Reddy's has reported 11% growth in net profit for the third quarter. Monal joins us with more details on the stock.
Thanks, Pallavi. Yes. Also, the stock, if we were to look at the fine print, the North American business did show a rise of 9%, while the India business came in soft at a growth of 5%. So the management commentary has been pretty strong. The conversation that we had with the India CEO suggested that they're looking at a high single-digit growth in the US, and they're aiming to get back to a double-digit growth in the India pharma market, also planning to overtake the normal IPM numbers. And they're aspiring to be among the top 5 in India. Now, if this were to go through, of course, that's a really strong positive. And they've maintained their EBITDA guidance at 25%. But brokerages seem to be a little skeptical on the same. Most of them they've kind of maintained their ratings, with Citi stating a sell Systematics a hold, IIFL stating underperformance, and Nuama, which is stating a reduce. So the common concern is that there's a lot of concentration in the US on a certain products. The core business is not registering as much growth. So that is also the new lineup of products that Dr. Reddy's has. None of them is enough to give the next leg of growth. It may only be sufficient to set off the price erosion that the company is experiencing in the base business. Also, the IPM growth, the analysts have some reservations there because the company has been consistently underperforming for quite some time. So that's the overall gist of it, but positive on commentary.
Very interesting, Monal. Positive on commentary, but brokerage is not seeming as bullish, of course. And well put there in terms of what brokerages are skeptical about. Let me quickly move on though. Blackstone-backed Aadhar Housing Finance aims to refile for IPO, and according to sources close to NDTV Profit, we have Saloni joining us with all of those details. Saloni, what can you tell us about this?
Hi, Hersh. As you mentioned, Blackstone-backed Aadhar Housing Finance is planning to refile their IPO by February, or at least the next 2 weeks, as what we've gotten to know from sources. Now, they had actually filed for an IPO in January 2021, for which they got the nod from SEBI in May of 2022, which meant that they had a year to come up with their IPO, and they did not last year. So that's what they are refiling. And the offer size that we've picked from our sources is that they're planning to raise in about rupees 4,000 to 6,000 crore. Now, this is again reduced from the 7,000 crore that they had planned to, raise from this IPO when they had filed in 2021. Blackstone had acquired Aadhar Housing Finance Company in in July of 2019 from Diwan Housing. So they have picked about 90% stake, and they still have that. So they will likely sell the stake partly as well, and the IPO is likely to have an offer for sale as well as mixed a fresh issue as well. So that's what we've picked from our sources.
Thanks a lot for that, Saloni. Now, moving on, my colleague Rishabh spoke to the co-founder of DMI Finance, Shivashish Chatterjee, about the company acquiring Zest Money. Listen in to what he had to say about the stake and the reason behind the acquisition.
We have acquired assets from Camden, which used to own the Zest Money brand and the Zest Money technology. We have not acquired equity in the company, and so in terms of the deal, I think it is important to realize that the difference is that we have not acquired the company; we have bought assets from the company. And we have an exclusive right to continue working with the company and the platform as the preferred lender on the back end. So going forward, what we expect to see and what we hope to see out of this is Zest has a stable of products that fit very well into what we do. It is complementary to what we do. We have, as DMI, we focus a lot on younger borrowers, on younger consumers. We focus a lot on financial inclusion, tier 2, tier 3 cities. And our current stable of products prior to the Zest Money brand and technology acquisition was basically personal loans and consumption loans. Now, what Zest allows us to do is take not just their customer base and continue providing them with a credit home, but taking our customer base and give them the opportunity to transact on the Zest platform. And the Zest platform is basically, if you think about it, it's all of e-commerce. It is a large number of roughly 15,000 live and active offline merchant networks. And so it allows us to take our roughly 20 million customer base and offer them access to the Zest platform as well. So all in all, I expect that this is going to be extremely value accretive to DMI, and hopefully it'll be value accretive to Zest's employees who should continue to see significant work on their platform.
Right, that's all the time we have for you on this edition of Market IQ. But stay tuned to NDTV Profit, because as the budget countdown begins, we get you top corporate voices and what they expect of the interim budget. Here's what Sunil Singhvi of Secure Meters and Prithvi Haldia of Prime Database expect from Budget 2024. Listen in, stay tuned to NDTV Profit, more on the other side.
Industry have been requesting government, instead of bank guarantee, if they can allow bid bond, because a lot of members of sector are MSME and there are a lot of bank limits are blocked. It has already started in highway sector. Government is positive about it and they want to move in this direction. Another area is the QCBS, quality-based buying, where the total cost of ownership for the DISCOM reduces rather than being L1 buying. That we have requested. A lot of places where the inverted duty structure is there, we requested government to correct it and also come out with a PLI scheme for the power sector, particularly like CRGO material, etc. There is no capacity available in India. HVDC equipment.
I expect the next 5 years budgets to be like Big Bang. Third term, I'm at least hopeful that all the major reforms, whether they are on privatization, disinvestments, labor, farmland, all of this they will come in the next 5 years. And that would be the real journey of India into a totally different orbit. If this government does not come back to power, then we may have a slowdown. I don't know which government will come, what kind of views will they take, what's their economic policy, is too hard to tell. But if the same government comes into power, I am pretty sure that this country is up for big time reforms.